us this afternoon, or this evening or this morning, depending on where you are. My name is Erin Roche. I am the CEO of Candy and Flowers, which is a PR and marketing firm for the cannabis and CBD industries. I am very excited to be here today with some great panelists to talk through what's happening in the cannabis industry with cannabis investing, given where we are right now in the midst of the COVID-19 global pandemic. So I'm very, very happy to introduce you to the folks we have on the phone. We have Bruce Linton, founder of Canopy Growth, entrepreneur, investor, and business leader. Hi, Bruce. Thanks for joining.
Here.
We also have Kevin Shin, the founder and CEO of Grove Group. Hi, Kevin. Michael Harlow, tax partner and head of the cannabis practice for Cohn Reznick. And Virk, the president of Europe for Khiron Life Sciences Corporation.
Hi, everyone.
Hi. Thank you, everyone, again for joining, and for all of you who are listening in. So let's kick things off with a question that we all have about what's happening in the industry today. We know that cannabis has been designated as an essential business in most states, and that's leading to some increased revenue, but also some challenges with operating and staying open for some businesses. But we haven't heard a lot about how COVID-19 is impacting the CBD or the hemp market. So Bruce, I know you have a vested interest in that market, given some of your investments and roles on different boards with companies. So just curious your take on how the current global pandemic is impacting the CBD and hemp side of things.
So I've only had one outreach today from people with biomass, but it's early enough in the day. So I think what's not being talked about is that there's a whole bunch of hemp looking for a home. And that's just America. When you look at what I was expecting to see in Europe, I kind of thought, if we didn't have this, maybe the Italian parliament was going to work through how they regulated properly what they call marijuana light, but really a hemp production asset developing in Italy. And I kind of thought if it wasn't for this, maybe Germany would have moved more rapidly on implementing channels where you can actually have regulated CBD in the German market. So it feels like lost in the conversation is the surplus of available CBD in America and the absence of great rules coming forward in Europe, which feels to me like it defers something we didn't want, which is Europe becoming a leader in some of the regulatory frameworks and governments recognizing that probably last year's planting of hemp didn't go as well for the finished goods as we wanted to, but nobody's having time to talk about it.
Kevin, any perspective from you, I would say on the CBD and hemp industry and the impact that this has had, or just sort of what you're seeing in the cannabis industry in general based on where we are today?
No, I agree with Bruce and his comments. The increase of acreage farm last year to basically the year after was 450%. You're talking about a dramatic increase of farm hemp, places where you don't know where the distribution needed to go. People are struggling. The farmers aren't natural-born salesmen. They don't know how to distribute the product properly. There's problems in the supply chain that has to be fixed and addressed. And then companies are slowly getting to that aspect, and farmers are taking a big hit. And it's unfortunate given this time frame, but then it is what it is when you come to it. You're going to see peaks and valleys. So then obviously we saw a valley where demand was outrageous and farming increased dramatically, and it just supplied way too much. And then there was absolute bomb in the market, so that people are holding on to crops and just waiting to see when the next shoe will drop. I know a number of smaller farmers are going to lose their shirt because of this. This is unfortunate occurrence, but it's something that happens when you start in a new market. And we're going to see how this plays out in the next few months.
you're seeing bankruptcies now,
Absolutely.
and those being unreported, right? Like first one falls in Kentucky, and I think it was yesterday I saw an SEC filing where there's about 30 million bucks from another company which has not followed through in product. So these things could topple one after the other, and the whole area could end up having a real challenge raising capital because bankruptcies don't invite new money.
No kidding. Absolutely.
Michael, what about you? Any thoughts on this topic?
Yeah, I mean, I really relate to what Kevin said about farmers not being natural born salespeople. I remember, I think it was back in November, December of last year that an operator that we were talking to in a Southeast state who had just built their processing facility and done their first harvest called me with the question of, well, who do we sell this to? And it's like, really? that was kind of a critical issue that needed to be thought through before you put seeds in the ground. But yeah, there's a lot of inefficiencies in that market, and I think this is certainly not helping. I would also push back gently on the premise that cannabis has been deemed essential business across the country, because it's still a state by state, municipal by municipal issue. And we see, like in Massachusetts, where medical use is essential right now, but adult use is not. So and I think this is creating some political issues for the industry, because all the news you see on CNN is that cannabis sales are through the roof, and everybody assumes it's just a rosy picture across the board. But because of the way that different states and jurisdictions have deemed different businesses to be essential, it's not necessarily uniformly rosy across the country. I'm also concerned about what happens with the supply chain if dispensaries are essential. What happens to all those, the cultivation, processing, everything else that feeds into their supply chain, and are all those businesses going to be able to keep up through this COVID-19 epidemic or pandemic?
How is this going in like Nevada or in the ski resorts in Colorado, right? Like that kind of, and I'm glad they're not giving it extensive coverage, but like zeros are coming up.
Yeah. Tej, oh, sorry, Tej, anything to add on this one?
Yeah, actually, just picking up on something Bruce mentioned earlier, I would totally agree that we're kind of going through this slowdown now, which is maybe slowing down the regulatory tailwinds we've seen in places like Germany. Yes, there's definitely plenty of demand for CBD out there, and we're dealing with contentious things like novel foods regulations, but there are some silver linings. We are seeing some governments push forward, and actually the UK is interestingly becoming a place where CBD demand will probably be realized through these observational studies that are taking place, like Project 2021, which is something we're a part of. So kind of providing a framework to import CBD, get it to patients in need, at least on the medical side.
And then I'd like to bring up another point, just in terms of some of the factories that produce goods for, say, the THC side. We're seeing demand sort of seesaw, so that there's going to be a huge rush in the beginning, then all of a sudden there's a valley there, and then it's not good for business when you don't know when your next paycheck is coming, and then we're going to see a lot of disruption in the market. So then I think it's too early to say that all of marijuana is going to see increased revenue. So then I agree with Michael, and I say that we have to take sort of a sit back and watch, I guess, stance in order to see which industries are affected and how so.
Yeah, another thing that's, it's amazing how quickly things are changing on a day-to-day basis. So like I live in Washington, DC and Maryland. I'm probably 3 or 4 miles from the Maryland border. DC and Maryland both have medical markets that have been deemed essential businesses. But as of 8 o'clock last night, Maryland and DC are both under forced stay-at-home orders. So even if it's an essential business, I'm not sure how many people are actually going to be out traveling in practice to go to their local dispensaries. So I just don't know how this is going to shake out. It's a completely new environment. And, I was on a call probably a week ago with some clients, and somebody said, hey, we've been through a recession before. We know how this works. We trim costs. We come out of it stronger than we've ever been. And I'd have to push back. No, you haven't. Unless you were running a cannabis business in 1918, you haven't been through exactly this before.
Thank you. Just for everyone who maybe joined a little bit late, just so you know, we will be taking questions from attendees at the end of maybe the last 15 minutes or so. So please feel free to submit some questions throughout this. Kevin, I wanted to pick up on something you mentioned before. You're talking about the financial outlook. We don't really know what's going to happen, but what is how has this pandemic changed your financial outlook on the cannabis industry, or has it?
It's dramatically changed how I look and view corporations. Granted, we've always been very tight in terms of how we deploy capital, but then in that sense, we've always stuck to the base principles in terms of what's the plan, how are you going to get your revenue from? And in this situation, it's obviously gotten tremendously more difficult. So then depending on the type of business you have, the financial outlook has changed, right? And then existing businesses, how they're going to continue to operate has come into question. So then since these base factors have come into play, you're talking about a lot more exciting things, at least in terms of investor standpoint, that's going to happen, right? We're going to talk about distressed assets. We're going to talk about basically opportunities that didn't exist previously because, there's going to be corporations that can go out of business because they can't handle this type of seesaw and they need that monthly paycheck. And if they don't get it, then they're in trouble.
Bruce, any thoughts on the financial outlook and how it's changed for you?
But so I'm for sure staying long the sector, right? This is not a time to try and change your strategy, but in the companies I'm in, we're spending a lot of time now looking at what pieces can we acquire, because even if you're moderately capitalized and trade reasonably well, you now have all kinds of options that you didn't have a month ago. So I'm finding like the inbounds on would you like to be bought and the outbounds on maybe you should become part of our team are like very frequent conversations with companies we hadn't really thought about that with. So I think the playing field is going to change a lot over the next maybe 30, 60, 90 days, and you're going to have fewer names, but bigger names.
Michael, do you agree?
I agree. I mean, these guys are all better positioned than I am to talk about what exactly investors are looking for and how they're going to deploy capital. I do feel slightly vindicated in the sense that for the past several years, Cohn Reznick has been talking to operators about the importance of standing up professional back offices and accounting support, all those pieces of the business that are really not sexy. Everything you see is about sales and new brands and expanding new markets, and there's been a land rush or a grab to get as much market share as possible. And a lot of operators have neglected, unfortunately, to build out that back office support. And I think that the operators that have taken the time to really build out that back office support and hire professional finance people are in a much better position now. I mean, the questions I'm getting from clients are about nitty-gritty details about the payroll tax credit and how does that work, and how do we if the extension or federal tax payments aren't due till July 15th, how can we float that money for a couple of months, and what are our best sources of capital? All these kind of details that a lot of operators aren't going to be prepared to deal with, but the really strong operators are focused on those details now. So I'm kind of happy to see the accountants kind of ruling the day for them at the moment to put the operations in place.
And
I've seen things in like California where corporations have flip-flopped literally in the last 20 days on whether they're going to consider layoffs or terminations, and what the state government is going to say, what their lawyers are saying, because the law is changing daily just based on COVID-19, right? So then what originally was going to be layoffs in California actually ended up being terminations. And then terminations have different tax implications. Like, it's just changing the landscape so fast. Like in literally in a period of 2 weeks, they probably flip-flopped 3 or 4 different times in terms of which way is the proper way to actually handle your workforce. So then, this is by far not over. And then you're going to find a lot of opportunities, like Bruce said, for mergers and acquisitions.
Tej, are you seeing the same thing, given you're responsible for the European market. Do you have the same? Do you agree with the financial outlook? Are you seeing anything different?
Well, look, I can speak to both LATAM and Europe, and I think, look, I would generally agree that this environment is going to expose holes in companies that might not have all of the pieces to completely operate. And I think we're seeing it in LATAM, where companies have the evidence demand to meet domestic quota obligations to actually sell medical cannabis. That's far and few between, and Khiron was able to achieve that recently. If we look at Europe, it's a similar picture, and this is really when it comes to companies that either don't have the capital, and so Europe is still in sort of the nascent stage of growth, and so that's something that's definitely exposed there.
Okay. So the next question, basically, given your roles in different organizations and plant touching or ancillary businesses, what advice do you have to either investors or to cannabis companies looking to raise capital during this time? Bruce, do you want to start?
Well, so creativity is key, right? In Vireo, we raised, there was about a 3-day window about 3 weeks ago today, and we announced the closing of a $8.5 million US financing. That one was the only window where we could actually do pricing, because on every day prior to that, for about 4, 5, 6 days, the stocks just kept falling in price. And so you can't price something and then have the next day the stock lower, people won't hold. So I think the common equity markets, we're seeing a little bounce on it, but I would say creativity. When I say that, we're going to get to a question a little bit later about who has how much cash. That is a very good question at these times, because one of the ways to do financing is to look at who would I work with that has cash. And when you run down the list, it's very uneven, right? Like, so in Canada, you might have Canopy with like $1.5 billion, Afri with 400 million, and then you get down to small sums. In the US, you get some big checks. GTI is looking pretty good. Boris has done a good job at Khiron to have sufficient cash. I think you're going to start to see some strategic cross links. And maybe the final area is we're trying to do a SPAC, which is a funny kind of thing. You basically raise money with a management team and you can't tell anybody what you're going to do with it because you can't know. And then when you get the money, you go off and find an acquisition. There are a lot of SPACs out there that are cannabis SPACs that are looking for a transaction. And so they may have to put 3 or 4 or 5 things together in order to use their cash. But if I were running a cannabis company, I would look for SPACs listed not on NASDAQ because it can't touch you, but something up in Canada. And I would get on the radar because they actually have that important thing, which is some of them have as much as $300 million US of cash sitting there looking to get used. And I don't know how actively they're being pursued, but they have a time limit to get the deal done.
Kevin, I know you work a lot with startups. What advice do you have for them during this time, especially those that are still looking to raise capital, or those who have to, make some significant changes to their business model, given the current situation?
Well, I want them to be realistic. What Bruce said about SPACs is really great advice. Like, that's something that I was actually keeping close to my chest. And yeah, no, it's great advice because they're out there, they're available, they have cash, they need to spend it, right? And then that's really the key in this market right now. Because honestly, it's going to get worse before it gets better. So then, since it's getting worse before it gets better, a lot of opportunities in order to attack the market. You're going to have to be more realistic with your evaluations. Look for team ups. Possibly be a little bit more creative in terms of how you're structuring your corporation in order to make yourself more attractive as an investment, right? A lot of the people who thought that, like, for example, if they want to open a dispensary or something like that, then the model has changed, right? You can't walk into a store and get that done. You have to consider the interim needs in terms of what you have. You have to adjust your timelines based on what you can possibly accomplish during this time, right? And then you have to be realistic in doing it and adjust your goals, right? The people who are gonna fail are the people who can't adapt to change. And then they're just trying to nail basically a square peg in a round hole, and it's not going to work. The landscape has changed already, and then it's just about adapting to the market now and having that plan and ability to adapt with the market and suit the needs.
Mm-hmm. And Michael, what advice do you have for cannabis companies or for investors during this time?
Patience. One of the positives is that because of banking restrictions and historical debt restriction in the industry, there's much more debt available now than there was a year or 2 years ago, but it's still kind of the exception to the rule. So for better or worse, the cannabis operators have learned to manage in primarily a cash environment. I mean, cash is king right now, and nobody is better at managing cash flow and operating that environment than cannabis companies. So I do think there is some room for optimism. I also would default back to my earlier response about who's built that professional finance, accounting, and business team in the back office. I mean, the difference between clients that call me or have been calling me over the past 2 weeks have already done their homework. They have a plan. They know what their burn rate is. They know what their runway looks like. They've already done some preliminary analysis. If they were to have to make cuts, what happens if half their revenue drops off? Like, they have answers to these questions. Other operators call and they're just like, what do I do? Where do I start? Well, it's going to be hard to sell an investor on why to put their money with you if you haven't done all that research and planning already. So if your entire business plan was just based on opening the next location, get that next license in the next state, and continue to move on and build the back office at some point in the future, I'm sorry, but I think time has caught up with you.
As one of the investor filters that I put on is I really, I'm starting to look at how many quarters of cash do they have? And then I start looking at what's the trading value of the enterprise versus the cash value. And some of these have really poor disconnects. I then looked at, for me, do we think we can bring more in so we can get the cash flow positive? How long out to that? And then the final thing, which may not work out well, but it might, is I like states that are medical only. You mentioned Maryland and a few of these ones. And the reason is, I think when in a recession, the governor's job is to do three things: get people jobs, make sure that occupancy increases in real estate assets that are commercial, and make sure taxes can be increased and collected so they can pay for the people who didn't get checked off in box one, which is have a job. And if you think about it, cannabis is really good at doing all three of those. We occupy real estate, we generate jobs, and we're taxed pretty effectively and highly. And so I think there might be more pressure on medical-only states to move to rec sooner than they were indicating. And so you'll see a state like New York that's saying, well, you know how we said we're going to tell you in the March budget? We're going to now have a rolling budget. And so I think there's going to be a rolling budget for the uncertainty of their tax income and the possibility of actually doing an action that would have otherwise been deferred a whole year. Mm. And so I would keep your eye on that as a potential thing that happens out of this. I think the 2020 election at a federal level is not going to have a coherent conversation on states' rights or other actions that would make cannabis a much more bankable mainstream exchange. And I had kind of expected that to come out, but I think we're too distracted. So I'm more now optimistic about state moves to add rec.
Tej, did you have anything to add?
Yeah, I think for investors who are starting to screen companies at this juncture, I think going back to the point of capital allocation, I think if you're seeing companies that are taking sort of good capital and not chasing bad opportunities right now, or at least in this environment, like I can give an example, maybe this isn't the best time to launch, the next best CBD brand. So maybe pull back from consumer spending, start to focus on activities which are going to see near-term ROI, look for cash flow generative businesses. I mean, we're still at the inflection point in many new markets. LATAM just turned on. This is a historical milestone where Colombia is now allowing the legal distribution of medical cannabis in clinics. Europe, I mean, just to give an example, the German market is now a 10 million euro a market month, 10 million euros in sales per month. And that was almost nil 2 years ago. We're starting to see the UK just turn on as well. So I think you need to give some credit for some of these markets which are just about to turn on.
Well, I don't want to discount Asia either, because we have strong ties in Asia. Asia, what Japan has just recently turned on, China's turned on, Korea, from what I hear in the rumor mill, should turn on mid-April, right? So then they actually have money to spend, and they're looking for investments as well and joint venture partners here in the West and also in Europe. So then there's another play there, as long as you know how to work your verticals.
So, just changing gears a little bit, we've seen with a lot of the dispensaries that have been deemed essential, we've seen a lot of social distancing practices. We've seen states now allowing, certain states allowing curbside pickup and other things that have happened fairly quickly to ensure that the industry can stay open and operating. Just curious if you see anything else that needs to happen quickly to sort of maintain the ability for these companies to stay open and operating. And also, do you see, we haven't heard of any supply chain issues yet. Do you expect to see any issues in the supply chain given the current state of where we are today?
We like to joke with the people in the lab that an EU GMP lab is maybe the safest place to be in the world right now. But just on that, if we look at sort of ways to operate through this environment, and at least I can speak to the medical side of the business, there have been some really interesting things that have been happening. So similar to maybe some parts of the US, in Colombia, the cannabis clinics have been deemed as being vitally important and have been allowed to operate through this period. And one example of something that we're implementing in Colombia, where we have a leadership position, is teleconsultations. So that's something where we didn't do this by design necessarily for COVID-19. It was already something that was in place for addressing patients that weren't able to physically come into the clinic given their different ailments. But this is something that we're expanding upon right now. And so that's going to allow us to execute. Of course, you need to have all of the last mile delivery supply chain as well, which is something that we have there. Something that is also happening in Europe, which I think is sort of gone under the radar in this environment, is that the regulators, which were on the fence previously, have just opened up the possibility to do telemedicine in the UK for medical cannabis clinics. So this is something that is really going to kind of put it on the same sort of level in some ways as Canada, where you're going to be able to do a video conference consultation, get your prescription filled, and then if you have the right downstream supply chain, you're going to get the mail order fill. So that's something that I've watched for, is the telemedicine.
I would say if states don't allow vertical integration, and there's a disconnect potentially sooner than later because of the planning process. And in the states that allow vertical integration, I can see choke points. You already talked a little bit about curbside pickup, but if they have outside lab obligations with state-run labs, I can see that becoming an issue. The remedy of course, is allow a reduced testing obligation and the burden borne by the company. Places like Kush could get busy because I can see the supply chain on containers becoming a difficult topic. Probably be careful with how you use your vape. You don't want to wear the battery out if there's not another one around the corner. Stupid things like that. But really, the upside of this is places like Ohio are allowing more accelerated access to physicians and some of the stuff Tej talked about. And I think you can have conversations with state regulators that will have temporary changes that will never be gone, meaning delivery, meaning things like if you can't process and tell us how we're doing on a lab test with oils, can we please become also a flower as well state? I think there's a bunch of conversations that are kind of like an excuse and a reason.
Yeah, I think you're seeing a lot of innovation, and it's going to be really hard to put the genie back in the bottle after the fact. I mean, we see states liberalizing delivery, curbside pickup, contactless payment. I think the contactless payment is going to be a continued issue for the industry. We saw the SAFE Act put forward last year, but that really hasn't gotten legs and moved anywhere. This adds yet another angle to why we should argue for full-on banking in the industry, because in this environment, dealing in cash is just simply not safe from a health standpoint, not just from a public safety standpoint. So I think there's an opportunity here, while the industry is getting a lot of positive publicity about being deemed essential businesses across the country, to capitalize on that. I mean, I don't think your average consumer or news consumer understands what Taj was referring to, and that in an industrial cultivation or processing facility, that's one of the most sterile, clean, well-run environments you could possibly have. Like, I have a client in Colorado who was taking volunteers from his workforce to basically lock themselves in their cultivation facility to prevent anybody coming in or out for the next 30 days. Like, there's got to be a way to get those messages out to the general public about how professionalized and well-run these organizations are, that they don't hear on a daily basis.
Interesting. Okay. We have one question that I'm going to take a little bit early because Kevin, we have someone in the audience, one of the attendees, that has basically said, you're discussing a lot of larger companies in this space. What are your thoughts about smaller businesses, especially in the U.S. market? And you know, given your expertise and background, you know, what do you have to say to them about you know, what more could be done to ensure their success as well, given that they are part of the ecosystem that, you know, is part of cannabis being essential. A lot of them. What's your advice to them, or what do you think needs to happen to ensure that these small businesses and startups can continue to operate and stay open?
Well, that is a difficult question because if you haven't planned for it already, then it's going to slap you in the face. So then when you say, hey, how can I save myself now? If you're saying that now, then chances are you haven't taken the steps to properly ensure your future. Because of that, then I'd have to fall back onto the federal government and say, hey, what's the bailout packages for me? How long can I keep things open? If I have any open loans, how long can I keep those running for? Obviously, promoting sales and getting whatever you need to get done to keep your income rolling in. I will put in a lot of effort to make sure that those avenues to keep the profits coming, to keep on rolling and make plans to try to secure that. Right, there's going to be some difficulties for a lot of smaller businesses, and then this is where the planning that you need to take and the steps you need to take in order to secure your profit lines to basically ensure that your businesses will stay open. That plan should have been made before you even turn on the lights. Granted, we're in extenuating circumstances, but then given the situation, people who plan for it better are better off. Right now, you might want to take in some possibilities of, you know, what are my offers on the table? Should I start marketing and seeing if someone would like to work with me so that you can become a bigger group, so that you can use some of the benefits that your corporation can provide and hopefully do something along those lines where you can provide better and more services, right? I think one-trick ponies that provide very simple goods, if it's not an exemplary good, it's going to have a very difficult time staying open this time.
Bruce, I want to go back to something that you said. You're talking about a lot of the things that are happening or changing from a government or regulatory standpoint that are temporary, but they may actually stick with us. So you mentioned delivery or curbside. Just along those lines, do you think that the COVID-19 and a recession will speed up the federal government's end of prohibition? And what do you think that would do to current leaders in the space?
Yeah, I'm worried about the federal not really getting on with it in this election. I think it's going to become more and more states adopting it, and eventually the tipping point. I was optimistic 3 or 4 months ago that there would at least be some rational discussion around this because it polls pretty well. But it polls well enough. But you know, if it's not in the top 3 things people are asking about because employment and you know, the related recession topics poll better. So I'm not big on it for the U.S. at a federal level, regrettably, right now. I am seeing in other countries, so for example, in Canada, the state level is moving way faster than they would before to allow things like discussions around after this is over. Will maybe a restaurant which was selling coffee in the morning through lunch be permitted to have beverages as a cannabis beverage lounge in the afternoon? And I think those conversations will have a much better audience when people are saying, will you create more jobs? Because if yes, I'm in favor.
Mm.
And so I think there's going to be some stuff like that that comes out of it.
Mm-hmm. Michael, what about you? What are your thoughts?
Yeah, I think on the Fed side, this has sucked all the oxygen out of the room and will for quite some time. And again, if we go back to the Safe Banking Act as an example, earlier in the year, I was very excited about that, and it just kind of fizzled. There was actually a conference of community banks here in DC a couple weeks ago, and I attended one of their networking sessions specifically for cannabis. And the couple of lobbyists who were there that I spoke to all said the same thing, and that it does, to Bruce's point, it does poll very well, but it doesn't poll as many people's number one issue. It polls very high as a general question, but it's normally like the fourth or fifth thing on the average voter's mind when it comes to something they're pushing the federal regulators on. So when you make that argument to a congressman or senator, it just doesn't move the needle a lot, unfortunately. So I don't think the feds are going to move very quickly anytime soon, at least not until after this election. I do think you'll continue to see movement at the state level. But, you can look at what's happened with the federal stimulus packages and the fact that for the most part, cannabis companies have been locked out of probably the biggest benefit, which was the small business loan, the paycheck protection loans. There's still lots of other benefits that the industry is not currently excluded from, but the payroll protection loans were far and above the best benefit in that package. And, that was a complete, the cannabis industry never had a chance there. Like it just, unfortunately, at the federal level, it's still not moving as quickly as we would like.
Tej, do you have any predictions or thoughts on how the federal government will react? I guess in the U.S. and globally with the other markets that you're in.
Yeah, so I think speaking to Europe, I mean, look, the cannabis industry is still way off the radar of most politicians. I mean, it's talked to at a high level. I mean, the idea of legalization, I mean, that's really the sort of the argument that's happening in political circles right now. And we're seeing sort of slow shifts forward to see sort of, I guess you call the equivalent of bipartisan sort of cooperation in countries like Germany, but it's still going to take time, and really it's more of a medical market, and we need to see more patients start to adopt medical cannabis, I think, in order to sort of bring on the wider sort of idea of legalization. When it comes to sort of any other type of support, we're still far away from that. I mean, it's probably years away.
Mm. Kevin, what are your thoughts?
Look, in this time frame, we're talking massive unemployment, a lot of things that are going on. Is the federal government going to have time? No, I agree with everybody. The first and foremost question will be, how are we going to service the job and the dead? How are we going to service people possibly losing their homes? Right. Those are the first and foremost questions that are on the politicians' minds, because that's what's on the public minds. Right. Right now, cannabis is an afterthought. If the states start working in and try to demand that no contact payment is being made for the medical dispensaries and things like that, that could be a big benefit for the industry. But right now, I think that in the federal government's mind, we're not going to be looking at this specific issue probably till next year.
Mm.
But I do think we should give some of the states credit. I mean, some states are very quick to roll out tax deferrals. For example, California is loosening or extending the deadline for excise tax payments. I talked to one client. Their excise tax payment that they're essentially going to get a 60-day reprieve on was over $400,000. So that's a nice chunk of cash flow to help them over the next 60 days. I mean, all cross our fingers and hope that people are back in business in 60, 90 days, but we'll see what happens. States are doing other things that are not specific to the cannabis industry, like deferring real estate tax assessments, deferring sales tax payments, deferring unemployment tax payments. All of those could be thought of as short-term loans available to anybody, not just cannabis operators. So those are the things we're talking about with clients, is how do you prioritize cash flow to get you through the next 3 months?
So we have many questions from attendees. So just want to pivot to some of those so we can address them. There have been some recent articles confirming that the state legal hemp businesses are eligible for aid under the CARES Act in the U.S. However, medical and recreational cannabis firms will not have access to that federal relief. Are there any comments on how the CARES Act will impact the industry?
So it's complicated. It's correct. The biggest part, as I already mentioned, the biggest benefit in the CARES Act was probably the payroll protection money, the small business loans that are being pumped in the economy, which Treasury, even though I checked the text of the actual legislation in terms of cannabis, marijuana, even marijuana spelled with an H, as the feds sometimes do, is nowhere in the bill, at least the most recent copy I was able to look at. So it's really Treasury's interpretation that is determining that cannabis operators cannot apply. But there are other things in the legislation that are not industry specific, such as the expansion of the payroll, sick leave, FMLA leave, the payroll tax credit rebate for maintaining employment, 280E, the code section that generally precludes cannabis operators from taking advantage of any incentives in the income tax structure. 280E is specifically an income tax part of the code section. Payroll tax is completely separate, so we don't see anything that would preclude operators from taking advantage of the payroll tax credits, and those are refundable rebate credits. So it doesn't go in the income tax returns, it goes in the 940, 941 payroll tax returns. I think that's an important distinction that a lot of people are missing. So you should still be able to take advantage of that.
Anyone else have anything to add on that one? Nope, zero. Got it. So another question is sort of a short-term look into the crystal ball and make a prediction, but how do we think cannabis sales will behave over the next few months? 90% of sales are brick and mortar in Canada. Will consumers switch to online, continue to go to stores? Will there be slippage?
Actually, I'd like to ask one more question of the operators that's kind of related, and that is, what do you think is going to happen to the product mix? Do you think there's going to be less combustibles and more processed and edibles? Are you seeing that?
Well, I'll hit the first part of the question, maybe a little the second. So I think this is now getting to be sensible in Canada, and if there's enough retail points, the thing that they need to change in some provinces, so in certain provinces or states, if you have a retail store, you're allowed to do direct to consumer as well with delivery. And not every province or state has the same criteria. So in some of the smaller population ones, that's a permissible method of operating. In the larger ones like Ontario, they're still supposed to all order from a single central location, and a process that results from that. I think people will shift because it is the best current option. Not all stores are closed. Certainly most provinces, I think all provinces, they've been maintained open, but they have restricted access, etc. As far as the format, in Canada, they're in what is referred to as Cannabis 2.0, which is essentially the first wave. You're only allowed to sell really simple products, dried cannabis, and essentially oils that were diluted to a state where they were essentially like buying the flower. 2.0 is a whole bunch of form factors. It includes chocolate, edibles, and beverages. And beverages have hit the market from the people I've spoken to that run stores selling these. The sell-through has been unbelievable. And so you might start to see people actually having time to try different things and discuss different things and share on social media to a level they might not otherwise have. And so I think it could actually accelerate the adoption of form factors that are novel. As far as in the US markets, I think you're going to start to see places get pushed. So for example, Minnesota, you're not allowed to currently sell flower. But if testing of flower was a logical way to win an argument why it's easier to test that than say a distillate or an extract, perhaps that's the way it gets to be in. And then I think it'll affect the form factor, because everybody knows if you have flower for sale, you have a bigger market. And so hopefully we'll see some of these states have to adopt that outcome.
Tej or Kevin, anything to add?
You know, for us, it's, go ahead.
Go ahead.
Okay, so I'd say for us, because the markets are so nascent in places like Germany and the United Kingdom and Europe, I mean, what we're still seeing, you know, what the patients are actually gravitating to, and it was predominantly dry flower that was available in Germany, so there's still a strong demand for that product. So it's about 50% of the monthly demand. But we are seeing a shift towards more extract products as they become more available. It's a bit of a regulatory challenge. I'd say that is really the bottleneck. I don't think we're going to see too much of a change based on the broader environment with the coronavirus. In places like the UK, the market is just opening up. So theoretically, everything is on the table.
And Tej, just one more question for you. How are small companies in Europe faring? And what should they be looking for in terms of business trends to identify what success looks like for them in this time?
Yeah, sure. So I think we talked a little bit about the US and smaller companies, what to look for. In Europe, I mean, it's a much earlier stage market, and there's less sort of companies that have, I think, really interesting assets. But there are things that are hard to come by here. It's hard to come by great genetics. It's hard to come by great IP, at least all in one company. So in a market where we're capital constrained, and look, I can speak from Khiron's perspective because we're capital light when it comes to Europe. I think it's about doing smart collaboration agreements with different companies. So kind of knitting together a business as a collaboration agreement, drawing on strengths from different companies. And if we can create a business that maybe picks, say, genetics from company A and distribution from company B, that's something that is financeable at some point. And whether we spin it out as an SPV later or just both benefit from being able to access separate financing, I think that's going to be the trend to look for.
So this is sort of an interesting question. What do you think is going to happen with the growing amount of accounts receivables across different verticals? More and more companies have growing AR accounts in cannabis that are having a domino effect across the industries and crushing the cash flow. So what do you think is going to happen with that?
It's for sure a thing, right? So you have some places where you're vertically integrated and it's great. But in other jurisdictions, you know, you're hearing, I haven't had a recent update, but certainly there's a very visible retailer that has the letter M used twice in the name to start it, and then the second word starts with the same letter M. They weren't really apparently being very good at paying people. And so you're right, that becomes a serious issue because you start to look at how much can I risk, and at what point in time do you start changing your channel. And so I think everybody who's in the business now is starting to look at what's the quality of my receivable and who am I putting it through. And you might be better off not getting 50 points, but 45 points, but knowing you're getting paid. And so it is becoming a thought and discussion point, I think, for anybody who has to sell through.
Kevin, do you have any thoughts on that one?
Well, unless you want to get paid in stock. But anyways, what? So yeah, what? You're gonna have to be smart. You're gonna have to rate who you're getting your money from, and then, you know, if the balance just ends up being a little bit high, then I would take what I can get, at least in the interim now. You know, just because there are so many variables at play. So then, you know, make smart decisions, rate who your account receivables are coming from, and then make smart decisions based on how you think those core businesses are basically going to function in the future.
Mm.
You know, actually, it's interesting from our perspective. I'm trying to be that capital light player that's trying to buy from companies. So I'm that potential accounts receivable. And what we're finding is that you know, we have to really do a more in-depth pitch in our business to show the viability, so that the suppliers feel much more confident. And look, it is going to start off on smaller numbers in some cases. You know, I'd love to be putting in 100-kilo orders for different markets, but it will be smaller. But I think if we kind of grow that together, it'll be better for both parties.
Mhm. I think we probably have time for 2 more questions. I think a little bit more focused on the from the investor standpoint. How do you see COVID-19 affecting capital raises, and can companies even raise funds during these times, or should they be adjusting their raises?
Tej, I think I got to know you because you worked in that business entirely in the UK. Do you think there's any road shows happening now?
No, I don't think any investors are actually showing up to the office, so it's difficult to get a roadshow done.
Yeah, so you can get remote calls and you can have discussions, but I would say that I think we're probably in a pause period unless you're willing to take a terrible instrument, meaning like something with super regrettable debt terms or convert structures that it's only a question of when you get eaten. So I think that, you know, if you've got cash and you want to deploy it, you should call the companies and say, you know, and I'm talking, if you're looking at how do I play with a family office, million or 2 or 10, they can write the terms. Otherwise, I don't know who's going to raise money right now.
Well, I actually think that there is opportunities out there to raise money today, and it's not coming from your usual players, right? I do know a number of Asian players that are looking to get into the market just because they're new to the game, and then they're looking for partnerships. They're looking for corporations that they can learn from and absorb, and you know, leave some equity on the table for the people that are helping them get their business done. So at the end of the day, I don't think all the windows are closed, but I definitely say the environment makes it a lot more difficult these days.
Michael, any thoughts from you on that one?
I think it's going to be a challenge. I'm still thinking about the last question about AR, and you know, we were having or seeing collections issues across the industry before COVID-19 came on the scene. I don't really intend to preach to the industry, but I do think there's a kind of a come to Jesus moment that needs to be had. I mean, if you're not cash flow planning appropriately and you're raising money and then you're spending it all and stiffing vendors, that's not really a viable long-term business strategy. And it leaves a lot of service providers in particular with a very bad taste in their mouth. So on one hand, and I know this is an unfair brush to paint with the entire industry, but there are some large operators who have been in the news with these issues, as others have alluded to already. And unfortunately, everybody in the industry is going to pay for that a little bit. I just think that's unfortunate. But on one hand, you have operators who want access to full banking. They want to be treated like any other business in the country. They want access to capital. And then you have operators within the industry running up huge AR balances and potentially stiffing vendors. Well, you can't really have it both ways.
Okay, I think this we have time for one last question, so I'm going to give you each an opportunity to choose one. What is if you could tell investors one thing right now, what would it be? Or we've mentioned that there's possibly going to be a lot of consolidation happening, and who do you predict to be the next merger? So Bruce, I'll start with you.
I was just about to
advice
give
for investors, or tell us who's going to be the next big merger.
You're quick. I was just about to give that one to Tej. When you're deploying capital, I think you generally look first, is the market for equities good? Would I like to be in the equities market, or do I want to have a 10-year bond? Okay, well, 10-year bonds aren't very good, so maybe equities. Then you look at it and say, do I like the sector? Is the sector, and this is from a friend of mine, we went through this, is the sector got a healthy future? Okay, cannabis isn't bad. And then you pick the companies. And so I'm getting a lot of people calling me saying, I love this company. I'm saying, well, where are you on the first two questions versus the company one? And so I still think cannabis is a great sector. I do think that a lot of people are probably going to rebalance a little bit, right? Like when you can get really inexpensive major company stocks, you might not put as much money to work at the edge. And a lot of the cannabis companies are there. I do think there's been a couple of questions in here about there's only going to be a few, and I think it's true. So if I were doing a portfolio, I'd probably try to maximize exposure to not more than 5 names. And I'd probably put 2/3 of the cash towards the big names and 1/3 of the cash towards the ones that I think might get eaten.
Tej, what about you?
Well, I think on the one thing to look for investors, it kind of comes down to the cash is king, and it's not necessarily the cash that you have on the balance sheet, although that is very important to measure the longevity of businesses, as Bruce was talking about earlier. You know, there's companies where you can measure their life in quarters right now, probably. But I think it's also the cash flow generation. And so, look, we're still early enough in certain markets that we're going to see that inflection from being sort of negative cash to positive cash. And so I think keeping that on the radar. When it comes to consolidation, again, given the markets that we play in, which are more like LATAM and Europe, where there's much smaller companies, I think there's every possibility for consolidation in both of those markets. I won't name any names in particular, but I think if you go and do your due diligence on public companies, you'll see balance sheets are stretched, and you know, I think there may be a coming together in some places, but in Europe, where you don't have the public companies, I think you'll see it happen sort of under the radar, either in collaboration agreements or direct mergers.
Right, Michael?
There's no way I'm answering that question. I do think consolidation is coming. Cohn Reznick would like to be well positioned to help operators with due diligence or tax structuring on those deals. So I'm not picking winners or losers, but I do see there's a related question about 280E impact and whether or not the 280E tax drag would prevent, or is that ultimately going to lead to a select few MSOs consolidating? I don't really think that's quite the case. We still see standalone dispensaries, well-run, profitable dispensaries. They don't make a lot of money after 280E, but they're still cash flow positive. In our view, and in talking to clients, you have to cash flow or do more than $6 or $7 million in revenue to cash flow enough to pay your 280E taxes and still be a viable going concern. So that knocks out a lot of smaller dispensaries, but I don't think it ultimately means that you're just going to be left with a few MSOs, although vertical integration is very helpful as opposed to being a standalone dispensary with the 280E problem.
Kevin?
Yeah, I think Tej nailed it on the head. There's, you know, after everything he said, that's basically the thought pattern that you have to go through. And if you do that type of analysis, you're going to find out, hey, you know, I think this corporation can be acquired or not. You know, it's just obvious. It's right there in plain sight as long as you know how to read it.
Well, thank you all. A huge thank you from Kahner Global and from the hundreds of participants that we had on the call today. Really appreciate all of your time and your expertise and your perspectives on this topic and hopefully on topics to come. So thank you, everyone, and hopefully we can do this again sometime soon.
Thank you.
Thank you.
Thanks, Aaron.